All right, good morning.
The broadcast is now starting. All attendees are in listen-only mode.
All right, I said that a little early. Good morning, traders. This is Blake Morrow, and you are listening to the Face webinar. I hope everybody's having a great trading session. Happy Monday to you. It's been a pretty slow evening. We just got a little spike down in the dollar, and the euro dollar is moved to 116.30. It's a huge options barrier around here at the 116 and a quarter level. So I would not get too excited about the euro at this moment. Even though I'm long, there's nothing more that I'd rather see in the euro dollar than for it to rally, to 117 at the moment. But I doubt that's going to happen. There are some options that are expiring around here, quite a bit actually. So because of that, I doubt we're going to see too big of a move right now before the 10 a.m. cut. So it should be fairly quiet. So does that mean you should short the euro right now? Well, I mean, you can try to. I'm playing the long side of it just because of the longer term setup that we have here in the euro. But I mean, you might be able to get away. Excuse me, it's Monday morning. You might get away with being able to short it here and making 10 or 15 pips or something like that. But it does still trade pretty firm, and you have to keep in mind that the dollar actually looks weak against a lot of different currencies. We got the cable it's nudging right up against its major downtrend line. If you guys are not aware of where the cable sits, it sits like right up against its downtrend line right now. I mean, another 15, 20 pips, and it might start actually tripping some stops. I doubt we're going to do that this morning, but I am long the cable, so I'm not going to complain about that either if it does happen. But I'm just doubting it's going to. Again, I think that that eventually we're going to see the dollar break lower, but that doesn't mean it's going to happen right at this second in time. What we are going to do this morning is we are going to set up our bias chart before Steve and Stelios get here. So I'm going to go ahead and go through all the majors here in 1 second. And I know if you did not listen to the week ahead video this weekend, I'll just reiterate for those of you that I'm sure everybody's aware by now, but in the United States we lost a really great American. Senator John McCain had passed away from his finally lost his long battle with brain cancer. And it was tough for us in Arizona because he was where I live. He is our state senator for so many years, and truly an American hero. He was a prisoner of war in Vietnam. He had refused his release until all of his other all the other prisoners were let go. He endured I think it was 2 years of being a prisoner of war in Vietnam. And then served his country up until his very last day. So he's an amazing American, and he unfortunately did not win his presidential campaigns that he ran for. I say unfortunately because I've been a McCain fan my whole life. Obviously, being from Phoenix, it's like it's one of those things that he's a much bigger figure in my life than he was in a lot of Americans' lives. So anyway. It was a sad weekend for that, but anyway. Well, I'm gonna move on. No need to go any further. Anyway, let's get into the let's get into the charts, and let's talk about everything that's happening here. And there's no economic data. Forex Gal asked if there's any economic data today. Not a damn thing. We got past the German IFO reading this morning, which was great. And that was it. We are expecting some sort of NAFTA agreement for Mexico today, and the peso, I almost shorted it just a little while ago too. I was just about ready to short it. It's If there is a NAFTA deal that hits the wires, it's going to be interesting to watch the reaction in the U.S. dollar Mexican peso and where it goes. But I'm not going to. I'll talk about we'll talk about the kiwi, or the peso here in a few minutes. But that's going to be the big thing, and you have to also keep in mind that it's probably going to assist in risk appetite as well. So stocks may continue to rally as a result of us putting together some sort of NAFTA agreement. So, okay, let's talk about the euro, and let's discuss. First and foremost, we have spike highs. Spike highs that come in at 116.50, but I don't think the spike highs are actually that important. Because I think we can get above them. What's going to be really important is this resistance right here. Do you see this triangle resistance, previous triangle resistance? That is going to be significant in my opinion. That this is the price that if we break above, that's when things get bullish in the euro dollar. But we can extend our gains in the euro. We might extend them to 116.70. I think that's going to be pretty key. And that's what I really care about. I don't care about the spike highs overnight. What I think is likely to happen, and I'm just gonna. And again, I'm speaking to you guys as being long the euro. I am long the euro since Friday. So I'm not talking my book here. I'm trying to give you guys an explanation of what I think is going to happen. And just because if I think this is going to happen, it doesn't mean I'm going to sell mine either today. But what I think is going to happen is we're going to hit new highs, get everybody excited about new highs, and then turn lower like this as we damn, it's not working. these lines are not working very well this morning. So I think it's gonna, we pop new highs, gets everybody excited about hitting new highs, and then we just show a failure here, and then come right back down, and then eventually build up to a breakout. I just don't think that today we're going to have the oomph that we're going to need to actually break out. I might take my position off here at 116.70 and look to reestablish it. I might do that. I haven't made that decision yet, but I think a lot of it has to do with what the rest of the market is doing. So in my opinion, what is important for the euro dollar as far as for it to hold is going to have to be above the 115.75 level, which by the way, this is a flag pattern. Okay, we have a flag pattern that's playing right now. So if you can clone that, put that like this, okay. We have a flag pattern that's moving higher, right? Okay, so as long as we can stay above the breakout point, I'm really not worried about it. So by the time we get back down there, if we do, that's going to take us to about 115.70. So I think that's going to be support somewhere around there. Okay. We do have a bullish bias right now because I know we're up against really big resistance here. Okay, but also because we have this bull flag that's playing, so I'm giving it a bullish bias. Now we do also have this big inverted head and shoulder pattern, big. Here, let's get rid of this one. We don't need that right now. We can delete that to avoid confusion. Okay, so we have this big inverted head and shoulder pattern, which this is going to squeeze the hell out of the market. I mean, you imagine that everybody's short the euro dollar, long dollars right now. They can get the crap squeezed out of them today. We start, maybe not today, maybe this week, we start squeezing above 117, and it's we can really extend our this move up to the 119, 119.50 level. Okay. So anyway, there's the euro. Pound. So the cable, as I just explained to you, this is a major downtrend line. It all comes in right around here. I was looking at 128.80, but really the spike high here is probably significant. It is 128.80, isn't it? So that's significant, right? 1.2880. That is significant as resistance, and we are not bullish yet. I know I'm long. I've explained that to you guys. I am long, but you know what? Actually, I'm going to change that. That's going to go to range. All right. Man, these lines in these charts are really not working well. I don't know why. I don't know what's up with them today. We're really in a triangle formation, so I actually should put that as neutral right now. Okay. But we break above 128.80, it's going. Now, support is going to be at 128.30. It's going to be the overnight lows. Okay. And that's it. I'm expecting the cable to break higher. Whether today or tomorrow or something, I'm expecting to break higher. So, hey, risk appetite is strong too. As long as stocks stay strong, the dollar has got no real reason to rally at this point. I'll have Steve take a look at it, but take a look at the euro yen. Just take a quick glance over there. I mean, the euro yen looks like it's going higher. It's going to drag up the base currencies here. All right, let's take a look at the Aussie. Now, the Aussie is underperforming, as I expect it to. That doesn't mean we can rally. I'm going to say it's going to underperform. So I am long pound Aussie and euro Aussie, just so you guys know. Why? Because I think if the euro pops to 119, the Aussie might make it to 74 cents. Well, if you take the Aussie, it's a 74 cents, which is, maybe let's say roughly 80 to 100 pips higher from where we're currently at. But the euro goes up to 119, which is 300 some odd pips higher, or 250, 300 pips. Imagine what the euro Aussie does, right? This is a very, very, zoomed out euro Aussie. I mean, the euro Aussie could be trading at 170 in a situation like that. So, can the Aussie break higher? Sure it can. Do we have limited upside? I think so. So for today, resistance is at 73.45. Support for the Aussie. This whole area right here. Oops, I was wanting this whole area right through here. It's all big support, but we can write down the support for right now as being 72.90, but really support is going to be 72.50. I'm just going to write down 72.50. You guys can have fun trading the Aussie dollar. And I have to put bearish because it really is still bearish. It still is. And that's overall pretty bearish trend. I mean, we really have to start getting above like 74 cents for this to turn anything other than bearish. Kiwi rejected this top end of its resistance zone last week. You guys remember that more than likely. Go cable. It's your birthday. Go cable. All right. So Mohammed says, what do you mean by range? What do you think I mean by range? You tell me what you think I mean by range. Yeah, I want you to answer that question, Mohammed. You tell me. What do you think I mean by range? If something's in a range, what do you think? I want you to. I mean, I'm being serious as crap too. I want you to answer that question. All right. What do you think I mean by range? All right. So resistance is, first of all, resistance is right here. 67.15. We struggled with that resistance last week. It's going to continue to be resistance. Support's going to be down here at 66.15. 67.20, right? Right. Resistance is between two values, right? Or excuse me, range is between two values. So if something is range trading, okay, if something is playing in a range, all right, let me grab my pen here. If something's in a range, we see this in a, oh, shoot, that's not what I want to get. Where the fudge sickle is my pen? Here it is. Okay, so if something's in a range, bam, 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 bam. What should you do with it? Okay, be respectful of the range. It gets to the top end of the range, you short it. It gets to the bottom end of the range, you buy it. It gets to the top end of the range, you short it. You know what I mean? If something's trending, okay, uh, and really a range is more like this, is like within a like something like that, like a range. So that means you try not to get too excited about being really bullish or really bearish something. So if you see a currency pair that looks like this, uh, uh, okay, and you're like, okay, it turned bullish, then really what you should be doing is focusing on the buy side of the euro. Like, oh man, it looks bullish. Okay, great. So it's had this bullish reversal. I give you all the reasons why it's bullish. Now I just want to buy dips instead of like trading it as a range and trying to short it at the highs and buy it at the lows and short it at the highs and buy it at the lows. I only want to be buying it down here at the high or at the lows, looking for it to rally. Does that make sense? Okay. Hopefully that makes sense. Where in the hell was I? God. Okay. So Canadian, again, this is all NAFTA related. So go cable. It's your birthday. Da-da. Come on, break. My Chinese grandma, she didn't know how to speak English. Still doesn't. She's almost 90. She actually she's 87, 88. No, 89. She's 89. She turns 90 this year. She goes, break. I don't know why I was saying that. Okay, I'm tired. It's Monday. Dollar Canadian, because she can't pronounce L's. L. So she said, break. No, grandma, my name is Blake. Break? Blake. Break? Blake. Blah, blah. Break? Okay, so support is going to be at 130.60, 130.70. Well, what was that? 130.07. I'm sorry, it's 130.10. 130.10 to be support. You know what? With all this NAFTA news going around, I don't know if we should really actually reference a lower price. We should really just note this low here, 129.85. Because that's if we break 129.85. Oh, that's why I was saying break. We will probably challenge the lower end of this triangle, this channel here, which will probably take us down to like 129.50. CAD just broke through near-term support via ForexAnalytix. Oh, that's what it was. We had support at initial support at 130.40, just broke through that. You can see it right here. Whoops. 130.40. Next support 129.85. Is that what we wrote down? 129.85. Yep. If you have ForexAnalytix, then all that stuff, all this stuff is already written down for you guys. Resistance, well, I guess for resistance today is going to be at 130.70. Like, let's say something doesn't get done, which is possible. 130.70 is going to be intraday resistance. We are in a range. Here we go, Mohammed. We're in a range. What do I mean by that? See this? Range. 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 Right. Right. Okay. Swissy. It's a bearish breakdown. Through this wedge, it projects to eventually 96.70. We rejected previous support, acted as current resistance last week, so now 98.10 is support. Resistance right now, very simple, is at 98.65. Oops, 865. As long as that resistance holds right there, it's bearish. It's all previous support. So as long as we hold this level, it is bearish. Peso. Okay, so and since Mexico is meeting with the U.S. and we expect some sort of NAFTA deal today, then the peso could very easily break through this channel. This is previous channel. Now, if something doesn't get done today, we're going to do this. You guys know if something doesn't get done, we're going to go whoop. We're going to do that. I've got to take all this information at face value. So I'm assuming that we are going to get a deal done. You have to. So where does that leave us, or where can we go? Well, my opinion is very easily. See this blue line here? We're going to retest that. This is going to be the enchilada, pun intended. Get it? Mexican peso enchilada. Get it? You get it? No? Okay. The big enchilada is going to be down here. It's going to be right here, because what I think is very possible, and I'm going to draw this out for you, whether or not it happens this way. This is what I'm going to be watching, is if it drops through support, like let's say it gets to like 1832. God, these lines do not draw for crap today. 1832. If we get down to like 1832, which is retesting this trend line here, what that does is that breaks through the support, clears out all the longs. If anybody was long, they're just going to get cleared out. And if we can stop there and reverse for some reason, then you know what happened. Buy the rumor. Man, damn it. Buy the rumor, sell the news. So, people go, oh yeah, that's great. That's great that all happened with NAFTA, but why would I want to be long the Mexican peso? Because you have AMLO coming into office, and last thing I want to do is be long the peso. Is we've got crazy AMLO coming into office. You know what I mean? So my 2 cents is we could very easily take out these lows, and then I want to see how we react down here. Because if we just do a false breakdown, I'm going to buy the crap out of the U.S. dollar Mexican peso, because then it's buy the rumor, sell the news. You don't want to be buying the peso knowing the new president coming in. I wouldn't want to be. I don't want to be long the peso, frankly. But then again, do I really want to be long the U.S. dollar? I guess the question you have to ask yourself. But 1 or 18, I'm going to write down 1840 because obviously I have to, because that is support. But so just watch how the peso reacts down here. If we get down there, All right. Now, for some reason, things, don't work out the way that, the U.S. and Mexico is hoping. We're going to be right back up here at 1905. So the big enchilada. I have to keep it at range. I mean, I do. Okay. Let's go over to the Norwegian krona. So we got this big head and shoulder pattern. This support right here, spike lows, 830. Oops. It's key support. Peso just took out 1870 support. Resistance right now is 839, 840. So basically 840. And we are in a range, but we are threatening to go bearish. So, we're not quite bearish yet, but it's getting close. Swedish krona. This thing is held up extremely well. Not too sure why. 904 is support. Oops. Support. 915 is resistance. I'm trying to get things finished before Steve gets here. So we're in a range, but we would threaten to go bearish if we broke. Actually, it's, you know what? It's really still a bullish trend. I mean, it really is. It's holding up much better than I would think it would. Hey, by the way, do you guys see the cable? How it's just rejecting this 80 level? Look at that. Oop, just big resistance here, guys. Big. I think it eventually breaks, but I mean, I'm just telling you how big this resistance is. You can short I'm long the cable right now, but you can short it and just put your stops above 128.80. I mean, if you really wanted to, I'm just saying. I'm almost wondering if I should. I sold a third of mine just now. Above 128.80, and I'll just buy more. Know what I mean? Okay. Anyway, sorry, where were we? Swedish krona. I was saying it's really. I mean, you could arguably put it's bullish, but I'm going to keep it at range just because the dollar looks vulnerable. Dollar index. Okay, so the dollar index, we just slumped basically to support. You guys all know this is the neckline of the head and shoulder pattern. So support is at, I know you want to write down 95, but we're going to write down 94.90. Okay. 94.90. That is support. By the way, sorry, below that comes in at 94.80, which is that's that big trend line that we talked about last week. All right, so I also need to write down 94.80. It's also support. Resistance is really 95.30, but it could take us all the way back up to 95.40. So, I mean, I'll write down 95.40. And we have a bear flag pattern. This is a bear flag pattern. I mean, I know it's also a big head and shoulder pattern too, but it's bearish right now. It gets really bearish below this trend line. So just as long as you guys all know that. Last but not least, for the bias chart, here's the dollar yen. Resistance is at 111.50. Support is going to be a retest of this trend line here, I think, which will be probably about 50% retracement of this whole move. So that comes in at 110.60. So 110.60, resistance 111, whoops, 111.40, 40, right? 40, 48.50. So, all right, 50, 50, and this should be a range. Okay, so there's your bias chart. It is finished. It's finished. Okay. Steve? Steve?
Hi, I'm here. I don't know if Steve is here.
Hey,
he's here.
Stelios is here. Hey, guys.
Hello. Oh, we're both here.
Good morning. How you guys doing?
Good, mate. How have you been?
Very well.
Good. Just, watching everything just kind of trade up to the upper and lower ends of its like ranges. I just don't know if everything's going to break today. I'd like to believe everything's going to break out, but I don't know if everything's going to break out. So
we don't have a catalyst yet. That's the only sure thing. And as you said, no news today. So, it remains to be seen. The only certain thing is that we're seeing what appears to be another, push at low volumes higher in stocks. That seems to be the theme of the day so far.
Yeah, and well, it is, and again, give me a reason to sell stocks right now. I mean, I can give you all the reasons why I would want to sell stocks now, but for today, like why would stocks?
Yeah, exactly. In the short term, there seems to be no reason.
No, yeah. I mean, NAFTA, this NAFTA agreement is probably going to get done today, or at least part of it, or at least, Mexico and the U.S. are going to agree to something. And then, yes, we got to get, Canada on board, but, stocks are going to enjoy the fact that we're making progress there. So, and it's slow, and you're right, it's low volume. No reason to be selling. Forex Gal wanted to know about the S&P. I thought I'd leave that for you.
Sure, absolutely.
And I think there's other crosses that are moving that you probably want to take a look at as well. So it's a slow summer day, but whether or not we actually get these currencies really breaking higher or lower, it's to be seen. So.
Very true, very true. And as we said, it might not happen today, right?
No, it more than likely won't. But then again, it's always those days that you're like, okay, we have nothing happening today, and then this is the day that ends up breaking out, and we go, wow, how'd that happen? You know what I mean? So
that's one of the great things with trading is that when you feel it might be getting boring, at some point you get some big surprise, and you remind yourself that one of the things that you like what you do is the fact that there is no day that can guaranteed be said in advance that will end up being slow or boring. I mean, of course, many days end up being like that, but there's not 100% guarantee that's going to be the case, right?
Right, of course, absolutely. Well, I'm going to let you take the traders through some of these crosses and maybe some of the indices and gold and all that fun stuff. So, guys and gals, thanks for being here. I'll be back tomorrow morning. I'm going to pass it over to Steve and Stelios, and happy summer Monday to you.
Same to you, Blake.
Thanks, guys.
Okay, so starting with the S&P, there's something I forgot to mention the other day and I want to show, and that's something that's quite important when you're looking at the big picture. I've had, for years, and let me go back to the weekly first. I've had for years on my charts, for those of you that are watching, you must have noticed it, a pitchfork, an Andrews pitchfork, you can see it here. So, the extra lines at the side of the pitchfork are like the 200% extension, so it's like an extra line. Bottom line, what you can see with this pitchfork, and you can also see it on my daily chart, if I zoom out, is that, from the 100% extension of the pitchfork, which, as I said, are not the lines at the edges. They are the lines actually between these ones, the blue ones. So these ones, those are 200% extensions, right? So as you see, we've traded above the 100% extension of this pitchfork very few times. One of them was obviously this huge spike that we had to the end of January, which was like, a mania phase. And, we had a couple of corrections that took us below these ones, which in any case, at the 200% extension, we always found the resistance or support. And I'm mentioning that because we're now probing above the 100% extension once again, which means that going back to the start of this bull run higher, whenever we reach this 100% extension, and keep in mind, this is a pitchfork that is anyhow, ascending with, quite a steep angle, right? So anyhow, we're talking about a given uptrend. I mean, this pitchfork, in essence, follows a given uptrend. So now we're probing above this 100% line, and whenever that happens, we are getting close to an area that, it's likely to provide some kind of a move lower. So we've already probed above, and, obviously we can once again extend to the 200%, which, currently passes from, let's say, 2960. And of course, for every single day, it moves a little bit higher. But bottom line, this is not the place anymore to be buying. I do think that the market should find some kind of a reason to react lower. And, by the way, this whole corrective move lower that we saw following this mania phase that ended in the end of January, beginning of February, depending on the index, took the index back in the median line of this pitchfork. So bottom line, I think that we're certainly going into a territory that it's not an easy decision to buy. I mean, you'd rather wait for a pullback to do so, but you have to respect the uptrend as long as we remain above 2790. So that's the thing to be said here. Now, Dow Jones hasn't reclaimed the highs, but still, I can see this as a breakout from a triangle. So obviously Dow Jones lagging. This is obviously not the preferred choice if you want to be trading US stock indices, because the S&P today and the Nasdaq, never stopped, are pushing to new all-time highs. Having to do with the Nasdaq, I want to also show you that, I'm viewing this as a potential big ascending wedge, which, would have the implications that sooner rather than later it's going to roll over and, push lower quite aggressively. But so far, we're sticking, with this interpretation, and we have to respect the uptrend because the wedges support has been holding like a champion, right? Look at it. Many tests from the market, all of them have acted as support. So confluence of resistances, we're approaching that are a little bit higher. We're approaching there roughly at 25.75, and somewhat higher, roughly at 77.40. We find a confluence of this ascending wedges resistance and the 161.8% extension of this of this corrective move lower, right? So I do think that there is the potential for more upside in the Nasdaq, but still I would be quite careful, because I think that even if we push all the way higher towards 7,700, the potential of a big rejection from there and the move lower is apparent from a technical perspective, right? In the short term, though, you can view this, let me draw it, there it is, as a flat top triangle breaking out, which, should bring more upside. So in the short term, Nasdaq remains quite bullish. This is a breakout from a bullish formation, but, looking at the bigger formation, this is likely an ascending wedge. So I would be very, very careful if we start pushing higher, because I think there's going to be a limit to that. I fail to see as an easy task for the index to, to reach this trend line resistance and just accelerate through it and break it. I mean, it wouldn't be unheard of. I mean, in fact, this is a bull trend that if you zoom out, you can see that over time it actually accelerated, right? So there you go. So just look at this. The rate of acceleration became more aggressive. That's why I think that we are at the last phases of this bull run. That doesn't mean that it can go on for a few more months or whatever, right? So I'm not advocating that you should be selling in the short term, but what I'm saying is that I think that the easy money to be made on the upside, have been made, and the next big move is lower. Until that happens, though, a continuation of a slow drift higher, or even an explosion at the end of this bull run are, likely scenarios. Now, one more, the IWM, and then I'm going to go to some of the European indices, and then we can go to FX. IWM, I had been talking about this triangle. We broke higher, which makes sense because that's usually what happens with triangles. They break in the direction of the trend. We're now testing the 161.8% extension of the corrective move lower that we saw starting in the end of January, when we saw those sharp moves lower in the vast majority of the indices. So this is quite a nice and interesting area, but I think that a more interesting area is somewhat higher from there, where the red ascending channel resistance and the blue ascending channel resistance, let me zoom out so you can see it, are converging. So you can see this blue ascending channel, which we ended up breaking lower from in January 2016, actually late 2015, and then we reclaimed the uptrend. We caught up, we went back in this blue channel, but this time trading within this red channel. And those two channels, the resistances, are converging and are actually going to be confluencing sooner rather than later, at some point, let's say in the middle of September. Okay, so I would be, I'm very interested to see, what kind of a reaction the market can have from there, because I also see, from a technical perspective, the potential for a sharp move lower. So as you see, all three indices that we went over, they still look bullish in the short term. There's no question about it. I mean, there are no bearish reversal signals at any of those. But all three of them, S&P, due to the pitchfork that we saw, NASDAQ, due to the bigger ascending wedge, and the IWM, due to this confluence of channel resistances. And as you've seen, very important channels. I mean, that date back a long time, and the market has been respecting them. All of them are showing the potential of of a sharp move lower in the indices. So in the short term, I think that we can stay well bid, but I wouldn't be holding to those positions if you have them for much longer. Not at least if I see some kind of a sharp reaction from these areas, which there is a good chance that these indices are going to be approaching these key areas of resistance at the same time. So that's going to be even more interesting to watch. Now, having to do with the DAX, potentially this is a very nice triangle here in the DAX. You can see it here. This ascending trend line support has been very critical to the trend since the beginning of 2016. Actually, we saw a false break lower a few days ago, but it was like for a couple of days. So I do think that a move below 12,100, which was the previous low here, or above 12,900, are going to indicate where the next big move for the index is going to be. Until then, I'm viewing this more or less as a a range of some kind. It's either a range or a triangle, as I said. So I wouldn't really be aggressively buying or selling, especially the more we approach the middle of this triangle, which is roughly at 12,600, which is also horizontal support resistance area. So I think we have to be more patient having to do with the DAX and having to do with the FTSE. I'm still viewing this as a corrective move, considering the prior V-shaped recovery and the very aggressive nature of the uptrend. And given the fact that, since we topped out in May, we've seen price action being very choppy, very overlapping. I don't know if this is going to end up being a flat bottom triangle. It might end up, being something different. So, for example, like a descending channel. Depends. I mean, there is still a chance that we're going to see something like this. Okay, so we might even push lower. But one thing is for sure, I would maintain a bullish bias. And I would be very interested once we see a breakout from this descending trend line resistance. Okay, so I think the FTSE eventually one of the most promising indices for a bullish breakout. But obviously we're not there yet. Now the Nikkei, and then I'm going to go to FX. Nikkei, two likely interpretations here to begin with. This ascending trend line support is very important to the market. You can see this. I mean, it's been holding the market since summer 2016, so it's already 2 years. So one thing is for sure, as long as we're holding above it, you have no reason to be bearish. And on the other hand, this looks like a triangle to me, or you want to see it as a range, fine, a range. In case of a range, you want to be on the safe side. Resistance is at 23,000. If you want to look at it as a triangle, resistance is a little bit lower. We're actually almost getting there. I think that it's going to be very hard for the market not to accelerate higher once we break above, or if we break above 23,000. So I think a break above 23,000 is going to be a bullish development and should yield follow through for at least another push towards the previous high above 24,000. Okay. So I think that covers all the indices. It was a good opportunity having a look at them since FX hasn't moved much since Friday. Now let me go fast over the metals. I think that gold has already made a first very important step for a bigger recovery higher. The second one it needs to make is break this 1206 previous support, current resistance, horizontal resistance area. It's also the 23.6% fib from the move that we saw from this high in April to the recent low that we had a few days ago. So I do think that the break above there, a daily close above there, opens a lot more upside to begin with. I think that the first area of resistance is going to be at 12.17. But I think that at the very least, this move should come up to retest 38.2, if not higher than that, right? So I think that, once we confirm this daily close above 1206, I think that 1238 should come sooner rather than later. And why not? We might even see higher prices. Why not? We can make it all the way to retest this broken trend line support as resistance this time. And depends on how many days it takes. Why not? It might, at that point, it might confluence this trend line support, broken trend line support might end up confluencing with this horizontal support resistance area and also the 50% fib at 1262. So I think that this is an attainable target, even as a bearish rebound, right? So I don't mean that we now have a bullish trend. Gold needs to do a lot to convince that this is anything more than a bearish rebound. But even if that's the case, as I said, there are still several dollars on the upside for somebody to look to make. Let me go through silver now. Silver is obviously less bullish. The first reason is that it hasn't broken above the equivalent channel. So it's getting there, but it hasn't done so yet. And even if it does, the first area of resistance is going to be at 15.16. I do think that between the two of them, gold looks better positioned for a recovery. So I think that if I had to buy one of them, and I'm actually contemplating buying gold, it's going to obviously be gold. I already said it. So gold looks, as the preferred instrument to look for a rebound. Now, I know a lot of people are asking about copper. Let me say here that first of all, for copper to start looking more bullish, it has to pass through this horizontal support resistance area at 273. Let's say we're getting there. And even if that happens, it can easily find resistance at 294, which was a previous area of support and a very effective one. But one thing is for sure, it has reached the double top target. I was looking for that. I had marked it a long time ago. It was here at 256. We actually tagged it intraday a couple of weeks ago. So, since this formation has been completed now, I do believe that that copper is more likely to rebound than it was previously, right? As I said, though, we're approaching resistance, so be careful. We still need to respect this sharp move lower that we had. Perhaps we get rejected once again from here. If that's the case, the next area of support is down at 245. You can see it here if I zoom out, quite an interesting area of support resistance. So approaching resistance here, if we break above there, then things become more complicated because we are definitely entering corrective phase, and corrections, as you very well know, are notorious for not being easy to read in the beginning. I mean, you need quite a lot of more price action to be certain what kind of a corrective move you're looking at, and we might eventually even go up to 294. Now, palladium, probably the one that looks better than the rest of the metals. Nice V-shaped recovery, passed through this horizontal support resistance area. But, in order for me to become a lot more enthusiastic about it, it has to cross over this trend line that defined the uptrend for a long period of time. If it gets rejected, then, it might even see more weakness. But if we manage to pass through that once again, I think that this confirms that palladium is definitely not trading as the rest of the metals at the moment. Platinum, on the other hand, is the exact opposite. I mean, it's probably the most beaten down metal, and it, despite others rebounding stronger, it seems to be consolidating. So, I wouldn't be surprised if it breaks lower once again. So, if I had to sort one of the metals, that would be platinum. If I had to be long one of the metals, that would be probably palladium, although since there is no current formation that I would be tracking that makes sense as a reward to risk ratio, as I said, the instrument I prefer for rebound is gold. So let me go through questions. My pleasure. Okay, we had a look at the DAX that our friends are asking. We had a look at the SPX. Okay, the rest of the questions Blake went over. So let's have a look at some of the yen crosses. Okay, so euro yen. Blake talked about it before. He said he wanted me to have a look. Now, having to do with euro yen, I think that since we cleared above this horizontal support area, acting as a resistance, I think that there is a chance that we're going to make it once again up towards 131.50. But I can't really turn bullish as long as we don't break above it, right? So quite a complex formation we have here, but I still believe that there is a potential for more downside in the euro yen. the closer we get to 131.50, the more appealing it's going to be to try being short. Having said that, keep in mind that we're currently testing the 61.8 of the last move lower. So, the pair might roll over even sooner than that. Regardless, as I said, 131.50, I think that's going to be a tough level for the market to crack. If we see some kind of a rejection anywhere, between where we are and, that level, I'm going to be interested. I might even trade it, depends on what it does, because I still see the potential for more downside. Now, having to do with pound yen, we have a clear area to be watching for here as well. This is actually what I was showing several days ago. I see the potential, for a large rebound towards 144.50. 144.50 has been very important to the market, both when we were moving higher and lower. So it's also the 50% fib of the last move lower. So I think 144.50, quite an interesting area to watch if you want to align yourself with, the bearish momentum that we had. I think that's the area to be looking for. Now, having to do with Aussie, Kiwi, and pound yen, I have to admit, as I said, that it's not so easy to determine what's happening now. Two things are for sure. First of all, Aussie yen has broken below, a long-term bearish formation. So, if I have to be something, it's definitely bearish. But, that's not very helpful in the short term. So in the short term, I was tracking like this channel, which we broke to the downside, but then we rebounded, and now we're testing like some horizontal resistance area at 81.50. As long as we remain below 81.50, sure, there is a nice potential for resuming lower. But if we breach that as well, and we once again find ourselves in the middle of nowhere here, I'm not going to be interested at all. I mean, I'm going to be looking for other things to trade. Same thing here with the Kiwi yen. I mean, it broke below a bearish formation. It kept pushing lower quite nicely. Now we've seen quite a decent recovery, which is currently testing confluence of resistances. So, if we get rejected from here, that's going to be looking very nice for a resumption lower. Keep in mind also that we've been trading within a descending channel, right? Clearly defined here. So if we get rejected from here, it's going to look nice to resume lower, even, break through the previous low, which was a nice confluence of supports. So, the rebound from there, given the fact that the pair needed to take a breather, was to be expected. But, if we retest this area, I doubt it's going to hold again. Now, on the other hand, for me to turn bullish from here, obviously what's going to be needed is a break above this channel's resistance. Unless we do that, I have no reason to be looking higher. I mean, you have to respect, this channel. It's a channel that has been respected by the market since the beginning of the year. So, it's already a multi-month formation, and you're statistically speaking, you have better chances by going with it instead of trying to fight it. Now let's have a look at the CAD yen. By the way, USD CAD and CAD yen. So as far as I'm concerned, this move in the USD CAD is very clearly corrected, right? And within this move, another push lower looks very likely. So this horizontal support area at 130 might end up confining price action to the downside. I mean, so we can even break higher without really violating this horizontal support area that's around 130. But even if we did break below it in the same manner that we have been moving lower, which means quite slowly, quite overlapping to retest this broken trend line resistance, I would still consider that the resolution is going to end up being to the upside for the pair. Okay, so I'm not ready to pull the trigger yet, but I have to say that USD CAD still looks appealing to me I traded it successfully to the downside, but I would really be fine in trying to trade it to the upside as well. I mean, the upside seems to be in the medium to long term the direction in which it's moving. Now, CAD yen, it looks clearly as a triangle, but in this case, nobody can exclude the possibility that this will end up being some kind of a channel, something like that, right? So for the time being, I see a triangle, and triangles have the tendency of breaking in the direction of the trend. And the last move lower that we had in the CAD yen looks clearly impulsive. You can see it. You don't even have to be an Elliott wave expert. 1, 2, 3, 4, 5. 5-wave move, right? Lower. So is this going to be an ABC? Is this going to be a triangle, an A, B, C, D, E, whatever? Sure. So bottom line, I expect this to be resolved to the downside, but I'm not 100% sure from which area that new move to the downside is going to begin. It's either going to begin, from here, or it's going to begin from there. In any case, though, absolute confirmation you're going to have once we clear this ascending trend line support. Then you will confirm that another move to the downside has definitely begun. Obviously, if that move ends up beginning from there, you will have already lost part of that move lower, but it should still have enough. So it depends on if you want to play it safe, if you want to be a little bit aggressive with, pursuing being short, how you want to handle this, if you want to be looking for the triangle or perhaps another rebound higher. But I do think that the interpretations are two, and the chances that one or the other are going to play out are extremely high. And I remind you that both interpretations are bearish. Okay, so I think CAD yen quite clear in which direction it's going to resume once it does. There is a question about crude. Now, I'm torn about crude. By the way, the rest half of my position was also stopped out at profit because I had moved, of course, my my stop in my profit. I was short for a long time. I was hoping that I would make a little bit more to the other half of my position, but it doesn't matter anymore. Perhaps I shouldn't have been so much aggressive with my other half. The 200 DMA test ended up being enough, to begin with, because we don't know what kind of a move this is going to end up being. But one thing is for sure, 200 DMA held like a champ. We had first broken falsely, which going to, it's too soon to tell if it was a false break below this ascending trend line support. It was channel resistance. It started once we broke above the channel. It started acting as support. So there is even the chance that a new leg higher has begun, a leg that can actually lead to new highs. I wouldn't be jumping the gun though, because for me to feel more confident about it, I would need to see a break above 70. Because if we do see a rejection from 70, like this one that I've drawn here, then perhaps this is a proof that the move lower is more complicated, and corrective moves often are complicated. That's a tricky part with them. So for me, bull bear line at the moment 70. So for those of you that are listening to the webinar, you know that I'm bullish crude. And you also know that I was actively looking to be short, and I was successfully short because I believe that the correction was coming. I also had a pattern in play for that. But I'm not sure yet if this corrective move lower is already done. It might be. It might be. I need to see a break above 70 to feel that that's the case. Until then, I'm just skeptical. I want to see more price action to be 100% sure. There's no question, though. 70 key level. It's going to be very hard for me to be looking for more downside if we break above it. And since my long-term bias is higher, that's going to be enough for me to turn higher. Now, let me see. We have more. And yeah, that's a good question. Let's have a look at the treasuries. Let's have a look at the bonds. Obviously, very important to the market. Let's begin by having a look at the treasuries. So this can end up being a diamond reversal, right? So if you want to be looking for a likely reversal pattern, this can be it. This is the ZN, by the way, the 10-year note. Or this might just be, an A, B, C at the very least, so a corrective move higher. But in any case, I see no reason why it can't extend to 122 or even 122 and a half before moving lower. Okay. So in the short term, and let me reiterate, just in the short term, I see the potential for a big rebound in the treasuries. Okay. Now, bonds, you see that finally today we see an acceleration lower. I warned multiple times about this, about the fact, and I even wrote my analysis during the weekends because I was only doing weekend analysis during vacation, that 164 is a very, very critical level to the market. Why is that? Because, it's a horizontal resistance area, but most importantly, that confluence with this larger formations, resistance, trend line, right? So I was warning that, buying the bond close to 164 was crazy. And we did get rejected and we seem to be accelerating lower. So, I would respect the potential of, more downside. This looks like a big corrective move lower after a huge bull market in the bonds. So eventually, if you're asking me in the long term, I would expect that the bonds will break higher. But as long as they stay within this formation, there is the potential for a lot more downside without even violating this formation. Now, keep in mind what I talked about. Bonds are getting rejected from resistance. Treasuries look like they can appreciate further. That also gives you a clear bias that the rebound, because I remind you that yields are exactly inverted, working, trading exactly invertly, right? So bonds moving lower means that bond yields are moving higher. So I'm talking about the potential for bond yields to be moving higher. At the same time, treasury yields moving lower, and that advocates towards looking for an extended upside in the Euro USD. So I think that, this corrective move higher in the Euro USD, let me switch to it, which, by the way, is currently testing more or less resistance because it's the previous triangle's resistance. We already got rejected once from there. Has a decent chance of resuming higher and, producing at least one more leg to the upside. So even by looking at the benchmark bonds, I do see a good potential for higher Euro USD, even in the confines of a corrective move, right? I'm not talking about like above 125, but I'm saying that as I was saying in the very initial days that we had that rebound, I remember talking about it, being from vacation on the webinar, that I think 118.50 should be tested sooner rather than later. Why not even a little bit higher, 119, 120? But I do think 118.50, which is a horizontal resistance area, will eventually be tested. There's a question about Euro USD and Aussie. I just covered Euro USD without even seeing your question prior to that. Let me briefly talk about Aussie and then we can call it a day. I remind you that Dale is going to be with us. Dale, and that means also our interviews are coming back following this week. So Dale was on vacation prior week and this one. Now, what I think about the Aussie. I think, two are my thoughts on the Aussie. Thought number one, quite well-defined downtrend. So I have to respect the downside. We got rejected in the last rebound. We got rejected from this triangle's support acting as resistance. So I have to respect the potential for more downside. But on the other hand, I can't help noticing that the downside momentum has stalled. So I see a mature move lower, a fatigued trend in the short term, at least fatigued, which has the potential of producing more downside, but I don't think I would be looking to sell that late in this trend. I would rather see a big rebound first and then do that. Bottom line, respect the trend, as long as we don't have something that violates it. In my opinion, 75 cents area is the area that defines the downtrend trend at the moment. As long as we trade below 75 cents, very hard to advocate for being long. But on the other hand, as I said, I wouldn't be selling that late into this move, right? So if I had no position, I would stay without having a position. So thank you all very much. Telio, anything to add from your side, mate?
Not really, no. There've been very little developments only NAFTA, really, so, or potentially NAFTA. So I have absolutely nothing to add. I'm sorry, I'm useless today.
Don't worry, it's slow market.
Welcome back, my friend.
Thank you. So have a lovely day, everybody. We're going to be, on the chat room, and see you all tomorrow.
See you, Steve.